Well, good afternoon and welcome to our end-of-day market review for April 19th, 2012. My name is Randy McMullen, and I will be hosting this session for you. And I am currently the market analyst for Ideal Trading Lifestyles. Just before we begin, I would like to see just a show of hands if you can hear me and see the visual okay. Just looking for a confirmation. Great. A couple others. Perfect. Okay, excellent. All right, again, welcome. Today we're going to review some of the daily news that happened through the day just to get a better insight as to what's going on with the markets. And from that, we'll leverage into our market outlook where we'll look at market sentiment for both the S&P and the TSX, and a prime indicator, which is the volatility indicator. We'll also have a discussion on that particular one, which gives us some understanding as to where the consumer sentiment is with respect to the markets. We'll also examine some of the current watch list that's out there and see what stocks have been identified for today. And if we want to look at our previous picks that we discussed on our previous end-of-day market review. Then we'll sum it up with preparing for tomorrow and discuss some of the updates that we'll be providing for you. All right, first thing this morning, we did see that that futures were actually pointing to somewhat of a mixed opening and actually began to decay as we drew closer to open, especially when the U.S. jobless report came out. And later on, we saw U.S. manufacturing come out that also ended up not meeting analyst expectations. So we can see that the day ended up with the markets actually declining. You can notice that it says Wall Street tumbled on weak data. So this is as a result of weaker than expected jobless reports and manufacturing data as well as factory data. Overseas, we saw that globally stocks fell as a result of some of the U.S. data issues and also ongoing concerns with Spain that we're seeing there, very much of a debt situation similar to Greece. So overall, what that does do from our market sentiment standpoint is it tells us essentially that we need to be extremely cautious in this market. As a result of that, you can see how today, for example, on the S&P, we a couple days ago ended up hitting this particular channel line, which is now proving to be quite a resistance for us. And so we've been unable to break this. It's a channel line as well as a trend line that's been in place now since the beginning of the year. And so you can also see from our momentum indicator that we're very much into a flat bearish market that is still under cross. So we're still not able to cross over our momentum, giving us an understanding that we're potentially looking at an upside to this market. Based on what we're seeing with some of the news that's coming out and some of the economic reports, it's a good thing that we're kind of just in a consolidation path with the markets, because expecting to see some lower lows as these continue to come out. And as a result, we need to see whether or not we're going to find support at this existing channel and trend line, which is a trend line, as you can see, that's been in place since last October that we have found strong support. So if we end up closing below this line, we're going to see some much lower lows in the market as well. So we need to be cognizant of that with the S&P going forward. Looking at the TSX, you can see that again here we're finding it very difficult to break through this particular channel line. The only difference is that we also now have a rising bearish market that is crossing over. And as you can see, we edged slightly higher on the TSX. So we are looking much better on the TSX, other than the fact that we have a lot of resistance overhead. We've got a channel line that's overhead. We have a short-term trend line that's been in place now since about the middle of February. And coupled with that, we have a Bollinger Band that's coming down pretty heavy on us. And we've got both the 50 and the 22 EMA that's also coming down on us. So we've got literally some pretty big hammers coming down on top of the head of the TSX. So that's what it makes us extremely cautious here as well, as it's going to take these indicators as well as these EMAs to flatten out before they're actually going to allow us to pass through. So that's one of the reasons we're seeing a consolidation more or less on the TSX. But it is favorable since we are into an overcrossing rising bearish market. So much more favorable on the TSX side than what we're seeing on the S&P side. Looking at our volatility indicator for the day, you can see that we did just kind of end up flat on the day, down about 0.43 of a point. But again, we're still holding on to this particular short-term trend line that's here as far as support. So that's a very positive sign for us. And as you can see, we're flat bullish on the VIX. So that's telling us that we've still very much got somewhat of a bullish market on the VIX, which means bearish on the S&P and the TSX going forward. So the key here now is, are we going to continue to see support at this existing trend line, which means that tomorrow we could in fact be in for some pretty big declines if we end up popping up and coming close to this existing trend line here, which is now resistance for the VIX closer to 20. But we are finding support there, so that's one of the factors that makes us cautious, because what that's telling us right now is that there is some overall consumer pessimism in the markets that's supporting a rising VIX, which means a little bit more emotion in the market. So we're still well under 30, so we're not concerned about any huge monumental declines in the market, but this does give us some advanced warning that we need to be somewhat more cautious going forward. All right, looking at our current watch list, we had a couple of picks on there, and what I'm going to do now is actually just open up the watch list right now so we can see if anything else has been added to that as well. And so what we have here is we've got a couple of picks. We've got BYD, EQT, and MFC, as well as RDC. We have no picks on the basic side for the TSX. So let's just take a minute now and have a look at our charts. And so just looking, for example, at the first stock, which is BYD, we're just going to pop that one up now. And this stock actually doesn't look too bad. As you can see, it's found some nice support at the 200 EMA here, and you can see the 22 is now crossing over the 50. So that's actually looking pretty good. From a volume perspective, we're seeing, just waiting for the volume here, I got to scroll down to that. You can see from the volumes perspective that higher than yesterday's volume, and definitely higher than the last averages for the last 5 to 10 days. So that's a positive standpoint. Let's just analyze some of our trends here so we can see just very quickly how we're finding some good lower trend line support that is slowly rising. And if we just look now at our upper trend line, you can see that we're actually got some room to about the 830 mark. And if we just draw another trend line here, which kind of shows the last couple of days, we're following this trend line now that's inching up higher. So this stock actually doesn't look too bad. Again, we haven't confirmed through the earnings, but from a trends perspective, this stock seems to be moving in the right direction. The lower cycles are slowly trending up. Just a little bit of a concern that we need to be careful here is this particular cycle and this one, the most previous one, was a little bit lower, not by much, but overall we're seeing a rise in these cycles. So that stock doesn't look too bad from a basic standpoint. Let's just have a look now at EQT. EQT, which essentially is a company that's based in the U.S. as well, is really struggling here. Definitely not something we look at. We've got the Bollinger Band coming down on top of us. We've got a down-sloping 22 MA that's undercrossed from the 50. Even though we are rising above, there's a lot of resistance overhead, so not highly recommended for this one here. If we just have a quick look at MFC now, and you can see how quickly we can work through some of these picks. MFC, nicely rising up. The only thing I don't like about MFC is the fact that if you look at our cycle lows, our previous cycle low did trend lower. And there's not much room here to the 52-week high, which is in and around $14. So this stock here, we're into quite a volatile range, so I would be very, very conscious of this one moving forward. If you decided this was one you wanted to select, you'd probably want to be looking at a stop loss strategy in and around the 22 and the 50 EMA, because if you do end up closing below that, you definitely want to get out. And you can see it's not very far away. You're talking 13.19 to about 12.90, so in between that for this particular stock. But definitely what I would be somewhat concerned about is this big drop here, and the fact that we've had a nice little cycle rise here. Now we have had 2 down days in a row, which is could technically tell us that this is a new cycle here going up, but this down cycle here still needs to be confirmed. And from a trend perspective, this trend will show you that we have had a breakthrough here and potentially here. So what we could be looking at is potentially an inverted triangle, which would confirm a nice little breakout for this stock, right? So this down slope here that we had, this down cycle, we could have exercised this now, and the fact that we did break through and close higher is a positive sign. But again, we're getting pretty close to the 52-week high here, which is in around $14. Okay, and let's have a look at the last one now, which was RDC. And this particular stock here, very quickly, it's a definite no. Again, we've got cycle lows that are definitely trending lower. We've got overhead resistance at the 50 EMA, a downsloping 200 EMA. So this isn't one that we're overly interested in looking at with this particular stock. So we've identified a couple of candidates for you here. And so if we just kind of go back now, let's have a look at what we had talked about with respect to our previous watch list. So yesterday we had looked at a few. We actually felt somewhat comfortable with ARW going forward. So let's just have a quick peek at that one, see how we did with it today. And incidentally, ARW, this was also the stock that we did select on the Ideal Trading Lifestyle side. So you can see this stock actually closed yesterday at 41.43 and dropped to a low today of 40.55. And you can see it's been up to a high of 41.96, so it was quite a range today for this stock, and ended up closing at 41.03. So this stock is definitely hit its sell target today. I don't think that it filled before that, so essentially we could still be hanging on to this one, but still a good-looking stock. Even though we had a down day, not a big deal. The key here is we want to make sure that we're finding continued support at this trend line right here, which is a solid one that we've got in place now, and also just drawing this trend line that we did yesterday, which confirms that we have had somewhat of a breakout. So this just could be a retesting of that particular line again. Okay, so in just looking at where we are right now, and kind of discussing how we want to prepare for tomorrow. Market conditions are such that we have seen some weakness in the market. The S&P right now is looking fairly weak. If you can remember looking at the sentiment, we had identified some concern in the S&P that is mainly news-driven, that's forcing us. We are still undercrossed in a flat bearish market, have been unable to cross over. So from an S&P perspective, we're extremely cautious. Does it mean that we're interested in not buying? No, not at all. We just need to be very careful looking at tighter sell prices. From a TSX perspective, we seem to be rising up there, but there's a lot of overhead resistance. There's no stat holidays coming up. We had those over the last couple of weeks. Reports that may affect trading. Well, tomorrow we have the unemployment report coming out, our typical Friday report coming out. So that will be coming out at about 8:30 Eastern time. So we're going to want to make sure we see that and how that might impact the markets. The VIX. Well, the VIX is sitting at around 20, and as we identified, seems to be picking up steam as our lower lows are trending up. And so as a result of that, we potentially could have some room for that to move up closer to about the 20 to 25 range. We want to keep note for the pre-market futures, mainly with what's going on right now in Europe and the issues with Spain and some of the debt issues there. Recent articles say that there was a debt auction of bonds in Spain that went very, very well. That being said, however, there's still the whole looming debt issue that is prevailing and seems to keep popping up. So we'll see how that plays out in the European markets overnight, and we'll see how that has its impact on the futures tomorrow, bearing in mind that we also need to take into consideration the jobless report that's coming out tomorrow morning at about 8:30 Eastern Time. So that about covers what we wanted to review today. I guess what I'd like to do now is just open it up for any questions that you might have. Either do it by raising a hand, or perhaps if you just want to type it in the question, or email us direct. So I'll just wait for a moment to see if there's a hand or a question that pops up from any of you that are listening, and for those that are on video, well, you'll just be able to take advantage of some of those questions that may have been directed to us today. All right, we're not seeing any questions at this point in time, so I want to thank you for listening in and attending this particular session. And let us know if you're finding value in what you're seeing here today, either via email. Let us know if you're able to take away some good information from this, either from the perspective of how we're viewing market sentiment and where the markets are going, to give you some clear insight, or perhaps what we're discussing as far as some new picks that recently showed up on the watch list. So either way, let us know what you think. Perhaps if there's anything that we should be adding to this, we'd also be interested in finding that out as well as we move forward, so that we can make sure we build that into our end-of-day routine. All right, so have yourself a great market day, and look forward to talking to you again tomorrow.